Indian Financial System, SYBCom Semester 3, Unit 2, Financial Market. Now, the first is, what is financial market? Financial market. Finance means money. Market means a place where goods, securities are bought and sold. Certain times, market is a place where you can create money, you can exchange money, and certain times हमारे पास जो हमारे पैसे होते हैं वो डूब भी जाते हैं. So a marketplace where buyers and sellers create and exchange financial securities or assets such as shares, debentures, bonds, currencies, etc. This financial market is divided into two sectors. The first is household and the second is business firm. Household involves, or you can say includes, people like us, means we people do savings. So we have surplus fund, that is surplus unit. Business firms involves companies. They are in need of finance and such they are known as deficit units. Financial market transfers money supply from surplus to deficit. Surplus means household. Household involves people like us. And to deficit. Deficit here means the business firm, means the companies. It acts as a link between savers and borrowers. This is a structure of financial system. Two sectors were household and business firm. Now, we the household people are included in household. We have finance. तो ये पैसा हमारे पास है, तो हम कहाँ लगाएंगे? We cannot afford to keep our money at our place because certain times there is always a theft of getting things dangerous. So we have two options. Either we can keep our money in bank as a safety, security, and or else we can invest in financial market by buying securities, shares, and so on. Similarly, when a business firm is in need of finance, उनको पैसे चाहिए, तो वो कहाँ से लेंगे, कहाँ से manage करेंगे? They will have or they will take a loan from bank, or else they can issue the securities and with the help of that they can earn money. So this, according to this diagram, you can understand that we are the people under the head of household. हमने either बैंक में invest किया हुआ है या फिर financial market में. और business unit को पैसा चाहिए तो वो कहाँ से लेंगे? बैंक से लेंगे या फिर financial market से लेंगे. So हमने जिस जगह पे invest किया है वहां से ही business firm वो पैसा लेंगे और अपनी organizations में use करेंगे. Financial market, any marketplace where buyers and sellers participate in trade of assets like equities, bonds, currencies, derivatives, etc. Example, stock exchange or commodity exchange. Same thing is shown in the form of diagram. Buyers and sellers, stock exchange or commodity exchange, and this includes equities, bonds, currencies, derivatives, and so on. Financial market may be in a physical location. Physical location includes NSE, New York Stock Exchange, second is Bombay Stock Exchange, or electronic system, NASDAQ, known as National Association of Securities Dealers, automatic quotations. Financial market can be found nearly every nation in the world. In this transaction take place in two ways. The first is securities, which includes stock and bonds. And the second is commodities, which includes precious metals or agriculture products. Very important topics, types of financial market. Over here in our syllabus, we have 9 types of financial market. The first is capital market. This capital market is divided into 3 parts: stock market, bond market, OTC, that is over-the-counter market. Then we have money market, derivative market, Forex market, spot market, interbank market, equity market, credit market, commodity market. So before taking or learning this parts into detail, this 9 markets will be asked to you in your university examinations in 1 mark or 2 marks question forms. So this is very important. The first is capital market. What is capital market? A market where buying and selling equity shares and debts instruments. A market where buying and selling of equity and debt instrument is done. This capital market is an investment and saving. It's again divided into 2 parts, from the viewpoint of suppliers and from the viewpoint of users. Now, what is included or who are included in suppliers? Retailers, investors, and institution investors. Whereas in users of capital, business, governments, and individuals are involved. Capital market are used to raise finance for long term. Long term means more than 1 year. This capital market is divided into 2 parts, primary market and secondary market. What is primary market? Newly formed securities are bought and sold in primary market. Means those securities which are never ever issued before into the market. These securities are issued for the very first time in the market. This is known as primary market. In primary market, the transactions exist between the issuers and the investors. Now over here, who are the issuers? The company which issues their securities. So they are known as the issuers. And we the people who buy that securities means we invest our money into that. So we are known as the investors over here. Primary market. Example of primary market is initial public offerings known as IPO. A very important short question. Setting up new business or expanding or in modernizing the existing business unit, primary markets are very useful. Market for long-term equity capital. Securities are sold for the very first time over here. So primary markets are also known as NIM, that is new issue market. Next part is secondary market. What is secondary market? In this market, it allows the investors to buy and sell the existing securities. And in this, the transaction exists between the investors. Now, why there is need of secondary market? What happens if there is no secondary market? If there is no secondary market, company issues long-term securities to investors. As I mentioned earlier, long-term security means more than 1 year. And the investors block their money for long-term. So as an investor, I have blocked my money. So 2 questions will arise in my mind. First, how can I get my money back? How will they be able to get their money back? And the second, how to convert the securities into cash? The only answer is we can do this with the help of secondary market. And how? Investors will sell their securities to other investors and in return, they will get cash. So this situation or this things, whenever it happens, it is only possible to get resolved only if there is secondary market. Next, what is stock market? It allows the investors to buy and sell shares in publicly traded companies. Any subsequent trading of stock securities occur in the secondary market. Over the counter, known as OTC. Very important short question. OTC is a type of secondary market And another name of OTC, that is over the counter, is dealer's market. An OTC market handles exchanging of public stocks not listed on the NASDAQ, NSE, BSE, and so on. Means those stocks which are not present in National Stock Exchange, which are not present in Bombay Stock Exchange, which are not present is NASDAQ, will be definitely be where that is the OTC, means over the counter. And which companies are usually found in OTC? The companies which are smaller in organization, has less regulations and less expensive trading. The next is bond market. Before going to the bond market, let us know what is bond. Bond is a security. Investors loans money for a defined period of time and at a pre-established rate of interest. Bond market. Provide financing through the issuance of bonds, enable the subsequent trading issued by corporations, municipalities, states, and federal governments. Debt, credit, or fixed income market. From this particular bond market, a very important question is asked in university, that is, who issues bond market? And the answer is corporations, municipalities, states, and federal governments. Money market trades highly liquid and short-term maturities. Short-term borrowing and lending takes place in money market. The time period of money market is less than 1 year. Money market rates, certificate of deposits, bankers, acceptance, certain bills, notes, and commercial papers. Derivative market. The derivative market is a financial market that trades securities that derive its value from its underlying assets. This market trades derivatives including forward contracts, future, options, swaps, and contracts for difference. Forex market, again a very, very important question asked in 2 marks. What is Forex market? The Forex market is a financial market where different currencies are traded at one particular place. It is the most liquid market in the world as cash is considered liquid of assets. Spot or cash market. Marketplace for the immediate settlement of transactions involving commodities and securities. The exchange of goods and money between the sellers and the buyers take place in the present. Just for an example, if you buy any routine thing, for example, just take a talcum powder. If you go to a shop to buy a talcum powder, what will you do? Will you pay them in the form of EMI or any XYZ fund? No, you will be paying on the spot. One hand you will be taking your talcum powder and on another hand you will be paying the XYZ amount. So over here you are paying on the spot. You are getting your commodity and on the very same time you are paying the XYZ amount. The price are settled in cash on the spot at current market price. Interbank market. The interbank market is the financial system and trading of currencies among banks and financial institutions, excluding retail investors and smaller trading parties. Some interbanking trading is performed by banks on behalf of large customers. Most interbank trading takes place from the bank's own account. What is equity market? The market in which shares are issued and traded either through exchanges or over-the-counter market. It is also known as the stock market. What is credit market? A marketplace for the exchange of debt. securities, and short-term commercial paper. Companies and the governments are able to raise funds by allowing the investors to purchase these debts securities. Commodity market. A commodity market is a physical or a virtual marketplace for buying, selling, and trading raw materials or primary products. This commodity market is divided into two parts. Number one, hard commodities, and number second, soft commodities. Hard commodities means natural resources that must be mined or extracted. For example, gold, rubber, oil, etc. Soft commodities includes agricultural products or livestock, which includes example, corn, wheat, soybeans, sugar, etc. Thank you.